Hello investors, this is a video on Seamec Limited. This video is brought to you by SmartInvestor. Like our videos, share our videos and subscribe to our channel. Click on the bell icon for new video notifications. Let us look at the standalone financial highlights of second quarter FY24. Revenue is at 77 crores, EBITDA is at 31 crores, cash profit is 28 crores and profit after tax is 2 crores. In half yearly, the company has clocked 267 crores of revenue, EBITDA is of 91 crores and cash profit is 86 crores. The standalone financial highlights: revenue year on year during the period Seamec Gallant has been replaced by Seamec Swordfish. Drop in revenue is mainly on account of Seamec 3, which was under dry dock during the reported period. Quarter on quarter, Seamec Princess and Seamec Glorious were off hire during second quarter FY24, being monsoon season. EBITDA year on year: lower EBITDA due to non-deployment of Seamec 3 and unproductive expenses on Princess and Glorious due to off hire during monsoon. Also, other income is lower by 3 crores. Quarter on quarter, Seamec Princess and Seamec Glorious were off hire during second quarter FY24, being monsoon season. Seamec 2 went on off hire for unscheduled maintenance. For the second quarter FY24, the company has clocked 76.9 crores, EBITDA is 30.9, EBITDA margin is 40%, cash profit is 27.9 crores, profit after tax is 2 crores. Standalone financial highlights for H1 FY24: revenue increase is due to addition of our barge Seamec Glorious, contributing 67 crores to the top line first half FY24 compared to first half FY23. EBITDA year on year increase due to addition of Seamec Glorious, mainly offset due to off hire of Seamec 3 during first half FY24. Reduction EBITDA margin was due to Seamec 3 being off hire, which has yielded relatively higher margins in the first half of FY23. First half FY21, gross debt is at 196 crores, net equity is 0.03, ROC is 10%, net debt is 20 crores, EBITDA is 0.22 times and ROE is at 8%. Let's look at the company overall journey. It started off Peerless Leasing Private Limited in 1986, and the current status is own and operate 5 state-of-the-art DSV vessels facilitating complex subsea operations. 3 bulk carriers provide marine transportation service of dry bulk materials such as food staple, commodities and industrial products. In the year 2021, the company had embarked on expansion. Step-down subsidiary Seamec Shipping FZC formed joint venture Seamec Nirman Infra Limited for tunnel projects. Overview of the company: vision and leadership under the dynamic wings of Sanjeev Agarwal, chairman of the MMG. Company have earned a reputation of a reliable and preferred player in offshore oil field and main fleet shipping industry. The company has incorporated in 2010 the fully owned subsidiary called Seamec International FZD, actively engaged in providing bulk transportation services and currently operates 2 bulk carriers. Recently established a step-down subsidiary Seamec Shipping FZC by forming a strategic joint venture with Averity Shipping DMCC to further expand bulk carrier operations. Seamec UK Investments Limited is a wholly owned subsidiary of Seamec Limited and is incorporated in 2023 March to explore business opportunities in UK and Europe regions. Under a joint venture agreement, Seamec International FZD and Arity Shipping, a new bulk carrier Asian Pearl, joined a group fleet strength. It is operated under newly formed subsidiary Seamec Shipping FZC. Key competitive strengths of the company include formidable player in offshore shipping backed by India's largest fleet of multi-support vessels. The company has stock parentage of MMG, strengthening financial position and market reputation. Vibrant leadership and competitive management bandwidth, having strong executional capabilities. The company has technical expertise and financial strength, boosting to leading position in tendering processes. Healthy financial position with adequate liquidity, providing business flexibility and superior profitability. Low maintenance cost due to proactive preventive maintenance. Company is competent and prudent commercial management, facilitating revenue visibility and superior vessel deployment rates. The broad range of services by company: IMR operations carrying out inspection, maintenance and repair of pipelines, single buoy mooring, spooling, free span corrections, risers, platforms, plumbs and other subsea construction. Remotely operated vehicles through unique dynamic positioning system (DP), facilitating safe and unmanned subsea operations where human presence is not viable. Subsea construction undertaking operations such as subsea pipelining, mooring, demooring, installation of risers and grouting. In the pollution control, company facilitates pollution control activities through skimmers, pollution control booms and dispersant arms. In the firefighting segment, supporting subsea firefighting operations through firefighting 1 and 2 equipment mounted on vessels. Undertaking rescue operations by engaging Dracon scoop, scramble nets, rescue bucket and Ucoda. The companies has marquee clients like ONGC, L&T Hydrocarbon, Posh, Mermaid, James Fisher and Sons, and bulk carrier services. It is called United Marine, Clipper, Eagle Bulk. The company gives highest priority for safety and is compliant with ISO 9001 2015, ISO 14001 and 2018, ISO 45001 2018. The marine management system company has a robust MMS, seamless connect between offshore office staff and vessel operations, ensuring and strengthening operational safety. Let us look at the industry outlook. Indian offshore oil field industry. Indian offshore oil field industry provides critical support to the country's oil and gas sector, which plays a key role in economic development. India's share in global oil consumption is lower than that of US and China, the third largest oil consumer globally after the US and China, with 36% of the country's energy met by oil and gas. Despite being third largest globally, India per capita energy consumption stands significantly lower than US and China and global average, underscoring huge growth potential in energy consumption moving forward. The per capita country-wise energy consumption is shown here. US is 236 gigajoules and India is 24,900 joules. Current oil industry dynamics: India presently imports 85% of the oil and 50% of the gas that it consumes. Fueled by the fast growth in the GDP, the rising demand for fuel has resulted in India importing 87% of its domestic consumption by FY 22 and 23. Production and consumption in India is 223 compared to 29.2 in 22 and 23. Indian offshore oil industry. Growing demand. Oil demand is expected to project to reach two digits growth of 2 times the growth by 2025. Diesel demand in Asia is expected to double 163 million tons by 2030, with diesel and gasoline covering 58% of India's oil demand by 2045. Natural gas consumption in India is expected to grow by 25 billion cubic meters, registering an annual growth of 9% until 2024. In February 23, India's oil demand rose to a 24-year high, resulted due to a boost in the industrial activity. It was the 15th consecutive year-on-year rise in demand from India. Increasing investments: India aims to commercialize 50% of SPR to raise funds and build additional storage tanks to offset high oil prices. In May 2022, ONGC announced plans to invest US $4 billion from 2025 to increase its exploration efforts in India. Supportive FDI guidelines: in July 2021, the Department of Promotion of Industry and Trade DPIIT approved an order allowing 100% foreign direct investments under automatic route for oil and gas public sector undertakings. The government has allowed 100% FDI in upstream and private sector refining projects. Union Budget 2023, the customs duty on certain critical chemicals such as methanol, acetic acid, and heavy feedstocks for petroleum were reduced. In September 2021, India and US agreed to expand their energy collaboration by focusing on emerging fuels. The growth drivers for Indian offshore industry: increasing oil and gas E&P activities backed by rising demand for oil and gas, critical nature of inspection, maintenance and repair services to maintain aging as well as new upcoming oil field infrastructure. The government targeting to lower dependence on oil imports by increasing local production, other alternate measures. Increasing adoption of advanced technology facilitating deep water and ultra water deep drilling projects. Backed by robust demand for oil and natural gas, Indian oilfield services market is forecasted to grow at a CAGR of 7% to surpass 2.84 billion by 2027. As you all know, oil is a key player in oil and gas and has been finding new discoveries. Now let us look at the performance of the company in the last 1 year. Seamec is currently trading at 1,163. The Scrip had a year high of 1,212 and a year low of 562 rupees. As far as the returns are concerned, in the last 1 year, the Scrip has gone up by 36%, jumping 313 rupees, and in the last 6 months, the share price has gone up by 55%, a spike of 415 rupees. In the last 1 month, the share price has gone up by 22%, a jump of 207 rupees. The company is expected to do well with the increasing demand for oil and gas from Indian consumers. Investors should analyze the performance of the company for the third quarter FY24. Long-term investors can buy on declines and can look for steady returns over a period of time. This video is brought to you by SmartInvestor. Like our videos, share our videos, subscribe to our channel. Click on the bell icon for new video notifications. This video is for education purpose only. You are requested to consult your advisor before making any investment decisions. Thank you.